What's happening in the Bitcoin market right now? It's a real puzzle. The signals we're getting are just all over the place. On one hand, you've got this narrative of pure panic, but on the other, we are seeing some moves that show an absolutely astonishing level of conviction.
And that really gets to the heart of what we're digging into today. You see, while it looks like a lot of people are running for the exits because of the price drop, some really big players, major corporations and heavyweight investors, are actually buying up as much as they can. So, what part of the story are we missing here?
All right, let's start with the obvious stuff. The part of the story that's making all the headlines and frankly causing a lot of anxiety. Okay, so the price has taken a nosedive, right? It's crashed through some really important support levels. And for your average investor, that's terrifying. It feels like the floor just fell out, a clear signal to get out and get out now. And if you want to put a number on that feeling, just look at the Fear and Greed Index. It has crashed down to just 11. That's not just fear, that's extreme fear. So yeah, panic in the retail market is very, very real. But here's the thing, that's only one side of the coin. Okay, so now let's flip that coin over and look at the other side. Because while all that panic is happening in the retail world, publicly traded companies, well, they're making some very, very different moves. And this really lays it all out, doesn't it? On one hand, you've got the retail market, where it's all about panic and emotional selling because of the price drop. But on the other hand, you have corporate strategy. We're talking calculated moves, long-term conviction. It's like they're looking at the exact same market, but seeing two totally different things. And listen, this isn't just some abstract idea. Look at American Bitcoin Corp. They are deliberately building up their reserves with the goal of becoming one of the top 20 holders in the entire world. And then you've got this wild story from Hyperscale Data. They're betting almost their entire market value, 98% of it, on Bitcoin. And they're doing this even though their own financial rating is considered weak. So you see two very different companies, two very different strategies, but they're pointing in the exact same direction: accumulate.
Okay, so let's peel back another layer. Let's dive into the on-chain data because there's a fascinating hidden battle happening right under the surface between two different kinds of big money investors.
All right, first up, we've got a group called the Sharks. Now, these are not small fish. They're serious investors with a lot of capital. We're talking holdings between 100 and 1,000 Bitcoin. But they're not the absolute top of the food chain, because that spot is reserved for the whales. These are the absolute titans of the ecosystem. We're talking entities that can literally move the entire market with just one single trade. So get this. While everyone was panicking over the last 7 days as the price was tanking, what were the sharks doing? They were buying. A lot. They snapped up 54,000 Bitcoins. And this isn't just a little shopping spree. This is the fastest they've accumulated Bitcoin in over a decade. This tells you something, right? This isn't an emotional reaction. This is a cold, calculated, strategic move. Okay, so if the sharks are buying so much, who's selling? Where is all this Bitcoin coming from? Well, it turns out it's the oldest whales, the veterans, who are selling off. They're probably taking some well-earned profits after a long ride. What we're actually seeing here is a huge transfer of wealth. Bitcoin is moving from those veteran hands into the hands of a new generation of large, deeply convicted holders. And why does this matter to you? Well, it suggests a real changing of the guard. You have this new wave of serious, long-term money coming in, which could end up setting a whole new, higher floor for the market. All right, let's zoom out a bit now and look at the bigger institutional picture, because the split in opinion there is just as interesting. And wow, this chart just says it all. You see that bar on the left? That's $357 million flying out of ETFs in just one day. That's your short-term tactical money getting spooked and running away. But then look at the right. One single firm, Strategy Nix, comes in and makes a purchase of more than double that, over $786 million. That's not a short-term trade. That is a massive long-term strategic bet. So what's the big takeaway here? It's that we're seeing a fundamental shift. More and more of these big funds aren't just treating Bitcoin as a fun, speculative asset anymore. They're starting to see it as a core, structural piece of their portfolios for the future, something you hold on to, regardless of the day-to-day price swings. Okay, let's take one more step back for some perspective. How is Bitcoin actually doing compared to everything else out there? And we have to talk about the elephant in the room, the biggest potential threat to it all. So yeah, Bitcoin is down 26%, which stings,
But when you compare it to the rest of the crypto market, it's actually holding up remarkably well. Ethereum is down even more, and the really speculative stuff, like the AI and meme tokens, they've just been completely wiped out, down over 50%. What this really shows is that when things get scary in the crypto world, capital doesn't just leave, it flies to safety. And within crypto, Bitcoin is that safe haven. But that brings us to the million-dollar question, doesn't it? The big what if. What about quantum computing? Could it just break Bitcoin? Well, analyst Willy Woo has a really nuanced take on this. He says, look, a quantum attack would be a massive shock, no doubt about it. The initial target would probably be around 4 million coins sitting in older, more vulnerable wallets. That would cause an immediate dramatic price crash. But, and this is the crucial part, the core network itself, the blockchain secured by proof of work, would likely survive that initial shock. See, you gotta remember, proof of work isn't like cracking a single password. It's about having to overpower the combined computational might of the entire global network, all at once. So a quantum computer might be able to break the keys to an old vulnerable wallet, sure. But it couldn't go back and rewrite the history of transactions that thousands and thousands of other computers have already agreed on. So the bottom line is, it wouldn't be game over for Bitcoin. Instead, it would be the start of a very long, very urgent race to upgrade and harden the network against this powerful new threat. So we've looked at all these signals pulling in opposite directions. The fear, the conviction, the sharks, the whales. What's the real story here? What's the signal we should actually be listening to? The real story, it seems, isn't about a boom or a bust. It's about this incredible tension. It's the fear that you see on the surface versus the cold, calculated corporate strategy happening underneath. It's the new money sharks buying up everything they can from the old guard whales who are selling. And it's that nervous, short-term ETF money clashing with these massive, long-term structural bets. And all of that leaves us with one final, pretty powerful thought to chew on. In a market that's so divided, so full of conflicting signals, maybe the daily price isn't the signal at all. Maybe it's just noise, designed to distract and mislead us. Perhaps the real signal, the one that actually matters, is the deep, unwavering conviction of those who are putting huge amounts of capital on the line, betting on the future.